Good morning, friends. Welcome to the webinar of Mehta and Mehta, the series of Secretarial Standards, something unique we started. And today's topic is SS-4 Secretarial Standard on report of the Board of Directors. And as usual, we have a panelist, Mr. Bala, Mr. Sudhakar, and of course, we have a presentation by Ms. Raveena, one of the partner of Mehta and Mehta, and our esteemed panelist, Mr. AGS Manikantha. Welcome, Mr. Manikantha, Mr. Bala, Sudhakar, everyone. Just formally to introduce Mr. Manikantha. Mr. AGS Manikantha is a qualified company secretary having 2 decades of experience. He has rich experience in various fields such as corporate governance, corporate secretarial, treasury, finance, compliance management, mergers, acquisition, etc. He is currently working as a company secretary of Infosys Limited and oversees the secretarial function of the entire group. He is an active member of FICCI Corporate Law Committee, member of CIA Regulatory Affairs Committee, member of expert group on Secretarial Standard Board of ICSI and various other forums. He is a regular speaker at ICSI and other professional circles. Welcome, Mr. Manikantha. Thank you for joining us. And friends, today he is not feeling well. Still, he is coming and sharing his time and experience with us. So special thanks. Really appreciate your dedication, Mr. Manikantha.
Thank you, madam. Thank you. Pleasure is mine.
Yeah, I'll request Sudhakar to say a few words on the topic. Then Mr. Bala, just 1 minute for the topic. And then Mr. Manikantha, you can add, and then Raveena can start the presentation. Over to Sudhakar. Thank you.
Yeah, thanks very much, Dipti, and good morning, participants. In fact, whatever Dipti has introduced to Manikantha, I must add to that 2-3 lines that he's a very dear and close friend of mine. Apart from that thing, for the last 4 years or so, he was a member of the SSB as well as the Expert Committee on Secretarial Standards. And his contribution is immense, and especially one of the respected boards reportees of Infosys also. Lot of nuances are there in that. That's why I requested Mani to share his experiences apart from the legalities, whatever we have. Preparing a board's report of Infosys. Why I'm stressing that is because he's also listed on the what's called as, if I'm not wrong, on the ADRs are listed on the New York Stock Exchange, and the compliances are much more than what we have to comply with as far as the Indian regulations are concerned. So my request to Manikantha is that to bring that nuances and what extra care he takes while preparing the board's report of Infosys. Apart from that thing, though SS-4 is not mandatory, it is recommendatory. But if you see the provisions of whenever you are preparing a board's report as a company secretary, the provisions are scattered all over the act. They are not under one roof. You have to refer to 134, you have to refer to 197, you have to also refer to other sections under which we take corporate actions. Wherever it asks you to furnish the information in the board's reports, you have to do that. The most important document is board's report, and it is a legal document. That's why I always used to caution in my addresses whenever I address the forums. Don't think board's report as your brochure, and don't give any kind of forward-looking statements and all in the board's report, because each and every word, whatever we are using there, the board has to take the full responsibility for that. At the same point of time, God forbids, if any kind of omission is there which you are supposed to furnish in the board's report, it will be a major non-compliance, and you cannot correct the board's report. Only there is a provision under the Companies Act 2013 that you can reopen the board's report like the way you can reopen the financial statements with the permission of NCLT. And when you reopen the board's report like that, how that is to be regularized, whether it is again to be approved by the board as well as by the shareholders, all these nuances which are the act is silent about that, but in the guidance note as well as in the SS-4, they have been clearly addressed. I'm not very sure that how much importance our fraternity is giving for that. That's why we always used to do, I mean, request the ICSI to give the sufficient advocacy for the secretarial standards, which we at ICSI has organized last year, that is from 2022, 2 series of webinars. And by now, lot of awareness among the fraternity is there. Even at Mehta and Mehta also, we took this opportunity of organizing the month of February as Secretarial Standard Month. And in fact, last week, due to some unforeseen circumstances, we could not hold this webinar, which we were supposed to hold it. And so all SS 1, 2, 3, 4, we have completed with this. This is the last seminar on this particular series. I'm sure that all the participants have got immensely benefited. At the same point of time, I'm also delighted to announce that Dipti, myself, and Atul Bhai, we have decided that another important topic, that is related party transactions. We all are actually struggling with understanding the nuances of RPT, and especially this regulation 23, which we got recently amended, apart from the definitions of RP as well as the RPT. So we are now going to conduct another 4 weeks of webinars, taking each and every point in detail. We are proposing to conduct 4 weeks dedicating to related party transactions, so that we can take a deep dive into that. And very soon we are going to announce the dates for that. I'm sure that you all will be joining and getting immensely benefited for that. With this, I give a pause and I request Bala sir to please take over. Thank you.
Good morning to all of you. It is a very pleasure for me to have eminent 3 people who have been associated or who are associated with the Secretarial Standard Board, Mr. Sudhakar, Mr. Manikantha, and the Dipti. As Sudhakar has put it, the ICSI Institute has gone into details and done the very, very excellent job, not only bringing the Secretarial Standard, but also the guidance notes. Although the Secretarial Standard has been introduced effective somewhere in 2018, again, it has been actually modified in the year 2019, and correspondingly, the guidance note has been issued from time to time. And the board report is the only document which actually communicates the yearly progress relating to the financial and non-financial matters to the shareholders of the company by the directors. Since we are talking about excelling in the corporate governance, everybody is aiming to excelling in the corporate governance. We are talking the transparent disclosures. The various disclosures which are actually being made apart from the financial statements, it comes into the board report. Because the financial statement speaks only about the number, it speaks about the methodology by which the numbers have been actually driven. But the various non-financial information which are actually made available for the benefit of the shareholders, even other stakeholders, is actually found in the board report. There are a lot of questions in a particular company. If a particular disclosure is not required, can the board report be silent? We can leave it, or the board report has to mention the caption and they'll have to say it is not applicable, the reasoning, etc. That is another question which actually comes to the mind. So the guidance notes, if we actually go through, it gives very elaborately what is to be done. And similarly, there is a heading, other disclosure. What is the other disclosure? Because almost 25, 26 disclosure heading has been named, there is other disclosure. What is other disclosure? Other disclosure also actually named in the guidance note. Because company might have taken certain initiative which is not finding any of the head, they can inform. Company might have undergone some sort of the, what you call, experience with the stock exchanges, some sort of the regulatory measures, stop trading, etc. and other things and all, they would like to inform. Or any other things company is planning to have it, they can inform. All the things which are actually finding in the place. So really speaking, the board document is the one document which actually gives in the simple English, in the understandable language to the stakeholders, giving the progress of the company in the whole year, what has actually happened. And for the listed companies, again, we have the additional disclosures which are actually mentioned in the LODR regulations. So in all the companies, what happens is the disclosure is actually coming through the board report. And in case of the listed companies, specifically, there are 2 more documents, that is only the corporate governance report and the management discussion analysis report. The specified matters as per the LODR regulations requirement is to be disclosed. There are certain questions will be coming over because the matter will be common in both the reports. should we have to disclose in the board report? Should we have to disclose in the corporate governance report where it is finding? Is it a duplicate? All those questions will come. You will actually find the answers to this in the secretarial standard. If you are actually disclosing in the corporate governance report, you can actually say relevant sections is addressed in the board report. You can say it is addressed in the corporate governance report or vice versa. Those things we can actually see. So today's seminar is actually going to take us the nitty-gritties of the disclosures. And we have the eminent panelists who worked on the secretarial standard board was put their uphill task in bringing out such a vital document. They have a lot of practical issues and aspects they can share. We have Mr. Manikantha, who's actually the pioneer of the company Infosys, which has been, pioneered instituting the corporate governance in the country. And they have been not only in national, but also in the international. We'll have the benefit of his practical experience to this seminar. I am personally most privileged. I'm sure I will get enlarged my knowledge on the ongoing learning process. I hope the same will be with the delegates also. With this, I hand over the mic to Mr. Manikantha to share his thoughts on this. Mr. Manikantha, please.
Thank you, Professor Bala and Sudhakar and Dipti ma'am. It's a pleasure to be here. Thanks a lot. Thanks for your generous introduction. I think there is a lot of pressure built on me. Let me see how to deliver as much as possible. On the opening remarks, I just wanted to give you a flavor of in two parts. One is the board's report and the importance of the secretarial standard. Now, right, first of all, the board's report. What is a board's report? Board's report is a report which is given by the members of the board to the stakeholders. That's the mode of communication. Whatever has happened during the year, that's the progress report, I would say, to be provided to the stakeholders. Now, if you want to provide a report of your company, how it has performed or whatever has happened, there should be some framework, right? So otherwise you may end up writing everything. So the board's report is a place where actually it gives you a broad framework of what needs to be covered. Now that's the beauty of the board's report and why they have, in fact, I think Raveena will take us through the contents of the SS-4 and what are the requirements, what needs to be mentioned in the board's report will be taken through. But the point what I was trying to make is there is a framework, there is a thinking which has happened of why, what is the, it has been seen from a stakeholder perspective. What is the stakeholder is expecting out of this board's report? Now we have moved beyond the shareholders. It is not only the shareholder, it is a stakeholder, which means that it can be a regulator, it can be an investor, it can be anybody else. So therefore, what is that they are expecting from the board as a communication to the stakeholders is something which we can look forward. Please be mindful that every word, every sentence, everything, whatever has been mentioned in the board's report becomes a legal document, and the board members will have to be standing by on that. There are many cases, there are many case laws which actually ties the responsibility on the board members, because of if there is a wrong mention or an omission which has happened in the board's report, then they will be personally liable as well. So that's the importance of the board's report. Now coming to the secretarial standard is a, what is the secretarial standard? Basically, this is a standardized and harmonized way of what is expected by all the companies, so that there is a set of standards which are actually prescribed to everyone. And it actually gives you the principles. The secretarial standard actually gives you principles of how each point, each section, each heading has to be answered. And believe me, while constructing the secretarial standards, there is a lot of thinking which happens. I'm sure Sudhakar and Dipti ma'am will agree to me. There are many cases, many points where the expert group, while constructing the secretarial standard, will debate. There are weeks together, there are months together. Some points will have a difference of opinion, and there is a consensus building. The the background why I'm giving this is you have to understand that it's not something document which is prepared offhand. There is enough research has been done, and all that is curated for the benefit of our professionals in the form of an SS, Secretarial Standard. Apart from Secretarial Standard, there is a guidance notes as well, which actually gives you a lot of insights in case if you are not able to get an answer or any solution in a Secretarial Standard or in your or in the Companies Act or elsewhere. Probably this is the place to go, right? So mostly 90% or 95% of the answers you will find it in the Secretarial Standard and the guidance note is what I wanted to mention. Thank you.
Thanks, everyone. Raveena, you can start the presentation.
So, good morning, everybody. I welcome you all in this webinar on Secretarial Standard on Report of Board of Directors, that is SS-4. Friends, as you all are aware, that before this Secretarial Standard 1 in 2015 on board meeting and Secretarial Standard 2 on general meeting, which were made effective from 1st July 2015. And as you know, Section 118, subsection 10 mandates the implementation of this standard by all the companies, subject to certain exemption, which came later on, particularly for Section 8 companies. Then on the basis of changes, the Institute revised the standard. Later on, ICSI came with another standard, Secretarial Standard 3 on dividend, which was implemented from 1st January 2018. And lately Secretarial Standard 4 on board report, which came effective on 1st October 2018 for the first time. As you know, SS1 and SS2 are mandatory, whereas SS3 and SS4 were recommendatory. So these are here. It's some of the highlights which I have already gone through. So basically, board report is nothing but disclosure and compliances, because we want to enhance corporate governance. Disclosure about various provisions about companies' performances and companies' policies, and the compliances which are mandated by various regulations, so as to consolidate all the disclosures and compliances of law. Here, now this standard is really close to my panelists, because ICSI constituted a core group, being Mr. Sudhakar sir and Ms. Dipti ma'am being the member of the core group of ICSI, who prepared and finalized the draft of Secretarial Standard 4. So friends, here I am going to moderate this session, and I'll be going through the standard in detail. And in the meantime, I also request to convey your questions to all of us, and all your queries will be resolved during our sessions. So basically, this standard provides not only to the shareholders, but also to other stakeholders, both financial and non-financial information about company and its performance. So basically, board report is nothing but a progress report for the entire year presented by the board of directors to its shareholders. The board report should be based on the company's standalone financial statement and not on the consolidated financial statement, and should relate to the financial year for which such financial statement is prepared. The Companies Act 2013 mandates certain disclosures to be made in the board's report. So basically, a listed company is also required to comply with certain additional requirements as stated under Securities and Exchange Board of India, that is LODR Regulation 2015. Similarly, a company whose securities are listed on an overseas stock exchange is required to comply with additional requirement as may be specified by such stock exchange.
Just 1 minute, please go back to the previous slide.
Sure, sir.
See, as mentioned, that this board's report should be based on the company's standalone financial statement, not on the consolidated financial statements. Having said that, no doubt about it, in the board's report, you can give the figures. When you are giving the standalone figures, you can also give the consolidated financial figures of the financial statements. But the only thing is, as far as the other information is concerned, you should talk about the company and not about the group. The
Right.
basic idea of this thing is people should not camouflage the performance of the company while reflecting the performance of the group. That is the main thing. So as Raveena has mentioned in her first slide itself, this is the communication to the shareholders of the company primarily and to the stakeholders in general about the company, not about the group. That's the primary thing. Yeah, go ahead, please.
Absolutely,
Yeah,
sir.
just
So
to add,
basically,
so the idea is that every board or every company will come out with the board's report, right? In the group, if there are some 20 companies, so all the 20 companies will come out with the director's report and the board's report. So therefore, in an isolation, how this company has performed is something which an investor or a stakeholder is interested to know. And that's exactly the reason why they have mentioned, why there is a mention of it has to be reported in the standalone financial statement. And as Sudhakar mentioned, sometimes it's very important to mention the consolidated view as well. Because without that, without consolidation, if you're not giving it, the information will be half-baked. It may not be giving a complete overall picture of the entity. So I think wherever it is required, a company can voluntarily do it, though it is not mandatory.
absolutely, sir. So now we move to the scope. So this standard prescribes a set of principles for making disclosures in the report of the board of directors of a company and matter related thereto. So in case a particular disclosure which is required to be made as per the standard is not applicable to a particular company, the company need not disclose the same in the board report, except where the standard requires specific disclosure in this respect. So the board's report of a one-person company and small company shall be prepared in the abridged form as prescribed by the central government. This standard is in conformity with the provisions of the Act. However, if due to subsequent changes in the Act, any part of the standard becomes inconsistent with the Act, the provision of Act shall prevail. So now we'll move to the part 1 of disclosures. That what are the things which we have to disclose in a board report. So in the secretarial standard, it is very well prescribed that what has to be written and what has not to be mentioned. Like if for say if it starts from the company specific information, like what is about an overview of the company. So from that, just it starts from the financial summary and highlights for the company. Amount, if any, which the board proposes to carry to any reserves. Dividend recommendation. Major events occurred during the year, like state of the company's affair, change in the nature of business, material changes and commitments, if any, affecting the financial position of the company having occurred since the end of the year till the date of the report. So basically, this disclosures is about the full year overview of the company. Details of revision of financial statement of the report. Then comes general information. In the general information, we give about the overview of
Raveena,
the.
1 minute. Just please go to the previous slide once again. I want to add 1 or 2 points here.
Sure, sir. Sure,
So here you see that when that column dividend recommendation is there, in this dividend recommendation column, if the company has declared any interim dividends prior to that final dividend recommendation, that information is also to be furnished here.
right.
And as we discussed in the last dividend, SS-3 webinar, we have mentioned that not necessarily a company has to come only with one interim dividend. It can come with more interim dividends also in a particular year. You might be knowing that TCS always used to come at least minimum of 3 interim dividends. But then they have to mention that all the dividend interim dividend particulars. Apart from that thing, it can also mention that what is the total dividend, how much ultimately it is going to the shareholders, number 1. Similarly, here, if you see that major events occurred.
That is normally the industrial practice in many of the companies. I have seen the balance sheet also. The company has declared interim dividend on such and such and such. Now it is recommending so making a total dividend of so much. That is the way the practice is actually being followed by many of the companies. Yeah.
Yeah. Apart from that thing, if you see the major events occurred during the year, it is state of the company affairs. It is very simple statement that you have to give the state of the company affairs. You have to give it under this particular column. As myself and Mani has mentioned that it is a legal document. So you have to understand what is the state of the company affairs means. What exactly the information you have to furnish. It is not simple that for a company secretary who is having 3 to 5 years of experience to understand what is the state of company affairs and from where he has to collect this information in the company. Whether he has to ask the finance department, whether he has to ask the operations department, exactly from where he has to collect this information and what the information is to be furnished under this subheading is very, very important. If one has to have any kind of this thing, this is what exactly the SS-4, the objective of SS-4 is to clarify these kind of issues. At the same point of time, in fact, in the guidance note, we are given more comprehensively that what is the information exactly is to be furnished under this particular caption, that is state of the company affairs. This is the primary objective of SS-4 as well as the guidance note. So I request and advise all the participants, whenever you are preparing the board's report, kindly do give a read or study to the SS-4 and the guidance note thereof. Thank you.
And
Go ahead,
one more thing is here. If you see the point number C, material changes of the comments, if any, affecting the financial course of the company having occurred since the year end of the year and till the date of the report. That way, the post-eve happenings, what has happened in the company after the year is over till the preparation of the board report approval. In between the period, any developments have taken place, that also is required to be informed in the board report. That is the point here. It may not have the financial implications of the particular year, but it is going to have the financial implications in the forthcoming year. So that is where you know to make a disclosure in this. That is the purpose of this saying that events post happening after the year is over, that also need to be disclosed here.
Yeah, I just want to make a different point. I think Sudhakar somewhere he touched about it. The preparation of this board's report is not only a responsibility of a company secretary. I think that's very important. This is all the company has to come together while preparing this board's report. So therefore, it is very important to get, maybe the company secretary team can be a nodal point where you can collect the information and the accuracy of the statements which is being made by all the within departments, and also whether it is signed off by the management or not. It's a very important thing to get the correct information from the management, because ultimately that is the document which gets published and which will be responsible. It will be responsible by the board members and also the officer and also the officers who are in default. So I would suggest, I think this is the right time for every company who is coming out with the board's report. Right now we are in the month of March, so therefore you will definitely be coming out with the annual report in the next 2-3 months. So therefore you can start thinking right now, and also you can start reading the board's report and the guidance notes so that it gives you a good understanding of what is required and then place it accordingly.
In fact, one more point I would like to add, Mani, here is that all you might be knowing that as far as Reliance is concerned, our board meeting for consideration of the financials always takes place within just 3 weeks of the closure of the financial year. Normally, our board meeting used to be on 17th or 18th of April of the closure of the financial year. That means several times people wonder that how come you people can do within 3 weeks audit also, as well as preparation of the reports and everything. I just want to explain in 2 minutes that our preparation of the annual report starts in the month of January as soon as the board meeting is over. The January board, that is the 3rd quarter financials are over, our annual report starts. As if we are going to have going to print the annual report. By February, we should be ready with that. By February end, we should be ready with the financial statements up to 31st January, as well as of the director's report, corporate governance report, every report, which is a part of the annual report. Only thing what we have to add is that month of March. That we have to fine tune it and then put it before the board within 3 months of that. And because every quarter the audit is anyway is taking place, and as far as that for 2 months of that, January and February, we take the audit in the month of March, and only for the month of March within 10 days of the closure of the financial year. So the preparation is to be starting right from the January itself. It is like a marriage, as we all know that whenever there is a marriage in the family, already the preparation starts the moment the boy and girl likes each other, and the moment the engagement ceremony is over, you start that this thing. Same is the case here also. And plus one more thing also, please remember that at Reliance, I'm sure that this is the case with every organization. We prepare a matrix of the information to be furnished section-wise, rule-wise, under the Companies Act, as well as under the listing regulation. Sometimes it may so happen if your company is in a particular regulated sector, that regulated sector's requirements are also there, which you may have to furnish the information in the board's report. That is also you have to take care of. So it is a big this thing. In fact, we have a 10-page document we used to have, in fact, and when I was there that point of time, we used to update it periodically. Whenever there is a change comes, at any point of time, we have to update that particular report so that when we prepare that January, also what we do is within the department itself, it is not one person cannot do the entire thing. So we used to assign the job to the at least 5 to 6 people. All these things you will be taken care of like that and all. And ultimately, whoever is the leader, he has to ensure that the information has been furnished and properly it has come and all. So this is, in fact, sometimes I feel personally that the way the information is to be furnished in the board's report, virtually you require a particular segment within the department for board's report. And you have to ensure that these people are properly equipped with the requisite knowledge, requisite experience, and you have to depute the job to them. In case of bigger organizations, I am talking, but at the same point of time, you can take it as a cue as far as your respective organizations are concerned also. In case you are in practice, this is also your responsibility as a secretarial auditor. Also, you have to refer to the board's report. It is not such a small job for you because you are also authenticating in your secretarial audit report that the company has complied with all applicable provisions under the Companies Act. So you are please ensure that you are taking the onus as far as the board's report of the organization is concerned. So you too, as a practicing company secretary, has to be fully aware of the information what is to be furnished in the board's report. And equally, it is your responsibility to take a draft before you finally release your MR3. I'm sure that you all might be doing it, but just as a cautionary thing, I'm mentioning about this. And the draft report, you have to also, again, the same thing, the way I was mentioning for the companies to have that checklist. I'm sure that you all must be having that kind of a checklist, which needs to be updated from time to time, and cross-check that with the final draft board's report, whatever you have received it. And wherever any qualification of the auditor is there, and the board's report, it is explaining that, you have to say as a secretarial auditor how you are going to reflect the same in your secretarial audit report also. Thank you. Go ahead, Raveena.
You're absolutely right, Sudhakar. As you rightly said, the preparation has to start much in advance. Because as you rightly said, in the company where I was working, we also used to bring out the financial statement within 30 days of the end of the financial year. That is always the case. As you rightly say, you go back in January. In fact, I used to go back in December itself. I used to tell them what are the information will be required in advance only, and other things and all I used to start. Is the same experience here. So you're really touched upon the very practical view. And I'm very sure in case of the Manikantha, they bring out the report within a week of the year is over. So he might be starting how much days in advance, I do not know, really speaking. When we are talking about within a month, they are bringing out within few days.
Yeah, I was about to mention our board meeting is 12th, approximately 10th to 12th, which means that board's report would have been closed by then.
Yeah.
So we actually start from December. In fact, in the era of printing the papers, which is some 2-3 years back, we used to order the paper in the month of October. Right. So that's the planning which happens. The moment your AGM is completed, you are already started thinking about the next annual report.
There are two parties.
In fact, Mani, the that eating the pudding is in that the taste of the eating is in the pudding itself. Okay, that as far as the board's report is concerned, today I was just watching that 182 people have logged in for this particular webinar. That itself shows how important the board's report is. And at the right time also, I think we are organizing this particular webinar because in another 1 month, the preparation starts with other small organizations are concerned also.
Very true.
Yeah,
Sudhakar, I
go
just
ahead.
wanted to make an additional point. The point which you mentioned about the responsibility metrics is very, very important. I think I would strongly urge all the participants in the companies to develop this kind of a responsibility metrics, which actually list down the requirements of the board's report. Not only the board's report, for the complete annual report, and it has to be revisited every year to see if there are any amendments which has happened or if there are any changes in the law, either deletion or addition, or maybe sometimes modification as well. So it's very important to develop.
Responsibility matrix, buddy, this responsibility matrix is for two reasons. Number one, to assign the responsibility, and number two, tomorrow, God forbids, if anything goes wrong, where exactly that the problem has initiated and what kind of remedial measures are to be taken. That is very important.
In fact, what we do is we do this responsibility matrix in 2-3 ways. One is at the planning, we do this. First of all, we do this. Second, we'll revise whenever it is required. The third is once the report is completed, we'll go back and say and fill up the responsibility to say that this particular line item, which page number of the annual report has been incorporated. So that way there is a proper checking as well, saying that, okay, this line item should have come in, whether I have incorporated or not.
Another important thing is that, see, every organization has risk management. We have to do that. One of the risk is compliance risk. Especially in the compliance department, it is the most important, the prominence is to be given is to the compliance risk. And when you are preparing a board's report, we have to understand that what kind of a risk is there and where exactly it is going to be and how that you are going to mitigate that particular risk. One of the points of mitigation of the risk is you have to ensure that nearer to the board's report time, that means whenever you are going to start your exercise, please have a combined meeting of your entire department together with your finance colleagues. This is what we used to do, that finance and accounts colleagues have to come together and have to understand that whose responsibility is what, because in isolation, the secretarial department itself cannot take this kind of a mammoth exercise. So it should be in the complete coherence with the finance department also, and how to that whoever is the leaders, they have to take the responsibility of apprising the importance of the information is to be furnished, the quality information, the timely information, and the quantity of information, whatever has to undergo into the board's report, that needs to be collated.
There are 3 people who are raising the issues. More or less, the nature of the questions is the same. So people are asking, what exactly you mean by the material changes? Elaborate on material changes. What percentage consider a change of the nature of the business? This is the more or less a similar question they are asking on the material changes.
You want to respond, Mr. Bala?
See, Bunny, for all these questions, you are the person who will respond.
Yeah,
I will be the person who will be adding
you.
on. You are the guest today.
Okay, fine. So the
people want to listen to you, not me.
Okay, let me try and attempt. So any changes which has an impact on the financial statements and the financial position at the end of the year are the things which has to be reported. So material is something which has to be determined by each company, right? For someone, let's say if there is an event which is 50 crores, it may not be a material for a size of Reliance, right? So what is material is something which has to be determined by each company. I think that flexibility is available with the companies. But however, if it has a impact which changes the financial position, see, I think we should use a different lens of an investor. If the investor is making an investment decision to invest or not invest, he should know, because of some of the changes which has happened from the end of the financial year, till the date of when the report is finalized, if there is any change, that has to be mentioned to him, because he will be taking an investment position by reading that. So the idea is to provide the overall comprehensive information to a investor is what is envisaged in this portion.
Yeah, I agree with you that, as you rightly said, it is dependent upon the company to company, that depending upon the size of the company. And sometimes even the smallest amount itself may become a big amount as far as that particular size of the company is concerned. So at the end of the day, it is the CFO and the CS together, they have to take a decision that what is the material impact it is going to have on the financials of the company is concerned. So there, be conservative, don't be very liberal, as conservative as possible, and better to explain in the board's report. Tomorrow, instead of getting a query from the regulator and then you're answering to that, which may be accepted, may not be accepted, it is always better to clarify that as much as possible.
There's another question has actually come. Details of the revision of the financial statement refers to standalone or consolidated financial statement. Answer is very simple. When you are actually revising the standalone, then naturally the consolidated things also will undergo a change to that extent. So once you revise the standalone, then you have to revise the consolidated one also. And second question is asking is, if there is a negative remark of the statutory auditor in the report of the financial controls, and mention that, however, does not affect the financial affairs of the company, is it required to give explanation in board's report? Here it is not very simple to answer this particular question, because when the auditor says it is a negative remark about the financial control, there is something definitely in relation to the financial control is lacking, which need to be addressed by the company. It need to be set aside. But when you are talking about the financial matters or not, that is immaterial. Controls are very much important. This need to be definitely addressed in the board report, whatever it is. And every remark, every observation, every adverse remark is required explanation in the board report. That is what the lawmakers actually wants it. So it need to be addressed here.
Sir, may I
Just to add on that, sorry, Amit, just a minute. Just to add to that, in the board's report also contains a director's responsibility statement, which actually mentions that there are enough controls to commensurate the size and state of the affairs of the company, that there are enough checks and balances which are built and they are effectively working. So if there are some things which like this happens, where the auditor has actually pointed out there are no financial controls, then the statement what you are making has to be seen whether we are making an accurate statement or not, right? So most of the people, what they do is they just copy paste whatever is there in 134, 135 to say that this is the director's responsibility statement or not. So in fact, what you have to do is you have to take the director's responsibility statement, read what is mentioned in that, and to substantiate whether each statement what you have mentioned, do you have enough proof, or is that a valid statement or not, is something which has to be validated before you put it there. Sorry,
sir, may I come in, sir? This was my questions to the panelist.
Yes, please.
Now, yeah, so what you mentioned is that, it is a part of the director's report, which is a declaration by the director under 134. But it specifically says in the case of a listed company, now this being an unlisted company, so it will not appear in the director's disclosure under 134 in the director's report, because this company is not a listed company. What you have mentioned, no, later on the internal financial controls to be followed by the company, and such internal financial controls are adequate and were operating effectively. Now this is applicable to a listed company. So unlisted company doesn't appear, but then in that case, I believe director's report must have a clarification, though it is not required as a good corporate governance.
Exactly. I think you answered.
Company is taking a shelter that it is not a listed company.
No, I think you answered your question. I can't imagine a situation, even if it is an unlisted company, if there is a qualification by an auditor saying that there are no financial controls.
Not only that,
it's hard to believe. Yeah, sorry, please go ahead.
Yes, go ahead, please.
No, I was just saying that it's very hard. So what is the response of the board members, right? So obviously that's a very logical thing. If there is
what they have mentioned in the director's report, however, there were certain negative remarks by the auditor on the internal financial controls, and the board has taken sufficient steps to overcome this. going forward. So they have not explained what was wrong, why it was wrong. So they are simply saying going forward, we'll take care. I think it is not correct on their part to just mention which is a very, general statement, I would believe.
Can I address this question, Mani?
Yeah.
Yeah, no, I think two parts there. One is, first of all, the board itself is acknowledging that there are some gaps which are arising. So they are standing by it, saying that, okay, I will take a corrective action going forward.
Correct.
I'm not substantiating what they have done is right or wrong, but at least that point is coming out, saying that, okay, we will take care as we go forward. Second, I think you are right in a way that they should have given a little more details of what was the nature of a default or what was the nature of a gap, and they should have substantiated to say that this is how we are trying to mitigate it.
Yeah, Sudhakar ji, you were trying to tell something.
See, what I want to say is that for listed companies, there is a specific provision is their internal financial controls. The auditor has to verify and has to give his comments. For other companies, that doesn't mean that you have a separate report on the internal financial controls, but certainly it is a part of the what's called as when the audit is taking place. You have to have the internal financial control in place. Otherwise, how can you present the true and fair view of the company? Number one. Number two, suppose if it is not a listed company, the auditor will explain that internal financial control, there is a weakness is there in his audit report only. That is the Caro report.
Yeah,
So
in the
whatever you
Caro,
are mentioning.
Sudhakar, in the Caro report, the auditor to specifically say with reference to the volume and the business of the company has got the adequate internal control and checks and balances there. He has to mention there. As he rightly said, in case of the listed company, there's a separate report is there on internal control. But in these other cases, it is actually a part of the Caro report, which itself is appearing there.
Correct.
Sir, now coming on your Bala sir, reply on revision on financial statement, you mentioned that if there is a revision in the standalone, automatically it will go on console.
Yeah.
But the revision in this case is in the console, because console, when they audited, there was a big gap. So that console statement has a revision, not the standalone.
No, if the consolidated statement is wrong, standalone is right, then only the consolidated is to be revised.
Correct.
There are two issues. One is actually a standalone. If standalone
that would be revised, but in standalone, go ahead, sir.
Yeah, if the standalone is okay, fine. If there is a correction record in consolidated, this is only a consolidated. But the only thing is, if the standalone is itself is something wrong, then automatically it goes to consolidated. It depends upon the situation, what you are experiencing it.
No, sir, I am experiencing there is a change in the console. There is no change in standalone.
Then you have to revise the console. That's it.
No, but then, sir, when we put before the shareholder, it is a listed company, we adopt both the accounts, standalone and console.
Yeah.
So in 22, it is already adopted. Now in 23, when it comes with a change in the previous year, because what was adopted by the shareholder in 22 AGM is different as far as 23 is concerned for the previous financial.
See, previous financial year, there is reclassification, regrouping. The things are actually permitted as per the accounting standards.
No, sir, it is not a reclassification.
Okay. But if there is a correction itself, what you are talking,
correct,
then it is required for the revision. But without knowing the details, we will not be able to answer at this point.
Okay, sir. All right.
To answer this question, it is very clear. If you are revising the consolidated financial statements, you cannot just do it on your own. You have to go to NCLT, get its approval. After that only you can reopen the consolidated financial statements or a standalone financial statements, whatever the case it may be. Similarly, when you are reopening the consolidated financial statements or standalone, your board's report too is to have that whatever the reasoning is there for that. The question comes that, in fact, if you see the guidance note, it is very clearly we have given that what exactly is to be done in this case. You have to also open the board's report of the respective financial year. In addition to the current financial year board report, also you have to mention about that. You have reopened the account for so and so reason. This is the financial impact, if at all anything is there as far as your company is concerned. Lot of things are there. My request to you is kindly go through SS-4 as well as the guidance note there. Lot of clarity is there on that. I think it is high time we have to move further now. Yeah.
Okay, sir. Thank you so much.
Thank you.
Appreciate it.
Thank you.
So someone is actually putting a question. What does financial control in place means? What are the steps to be taken? Shweta, I really do not know what exactly actually in your mind.
Sir, I just want to know, like we have been talking about internal financial controls. So when it comes to audit committee, like what are the steps which we need to incorporate? Like what are the steps which we need to look into how to understand that there's a strict internal financial controls as a company secretary?
See, when you're talking financial control, there are a lot of laid down procedure is there. There are a lot of accounting standards which you are required to be followed. And you have to have the consistent accounting policies. And these things need to be in place. When you talk about the thing, or these things are all in place or not there, or there is any deviation, that is what you need to look into. If something is actually lacking, you have to set right. So when you are saying what do you mean by financial control means, what are the various things we are supposed to do while preparing the financial statements, namely balance sheet and the profit and loss account, etc. We need to follow. That is what it means actually. System actually in place. As Manikantha has actually put it, there need to be a system because it says very categorically that directors have to lay down the systems in place that need to be adhered. That is what you have to actually go into the detail. If there is anything lacking on that, you have to separate the things.
Yeah, just to give a very small example, let's say if an accounts payable or accounts receivable, right? If an invoice is produced to the company, how will that be approved? It has to be, there should be some proper checks and balances within the company, right? It should be backed up by a PO or a PR, and whether was there a budget which was there, whether all the requisite requirements are there or not, and whether it has been accepted by the user department, whether first of all the services are availed or not. I think so most of the things have to be built into the system to say that, okay, these are the checks and balances which we are building it. Therefore, there is no transaction which is taken into my accounting or the financial statements, which is not accurate. So that's where you have to build the controls in place so that your financials are protected and it is accurate.
Okay, there is some more question which is actually coming. When there's a purchase of a visa of the proprietorship through the slump sale by a company, will it come under the material change and the commitments category? It is definitely a change because you're acquiring a new business, you're getting into the thing. It requires disclosure definitely.
I think an important point is to see that material changes, if it is happening from the end of the year till the finalization of the board's report.
Yeah.
Right, that's the point. Otherwise, if it has happened in a year,
yeah,
that obviously it will come in the board's report. It may not come under this section, but it may come under a different section. This section is dedicated to mention only changes which has happened from the end of the year to the date of the report.
Yeah, correct. You're right. And then there is another question which has actually come. For the purpose of determining the material changes, can we apply the criteria prescribed under Regulation 30? That is under the NODR, the material even in case of the listed companies.
Regulation 30 doesn't give you any thresholds. Again, it goes back and casts a responsibility of each company to determine what is material, what is not material.
In fact, you did mention in the initial stages the materiality that will differ depending upon the volume of the business of the company which is doing. Something may be material for the smaller company, which may not be material for the larger company. Correct. That call, I think probably the directors have to take it.
Yeah.
Not only that, Regulation 30 may or may not impact your financials. Regulation 30 is entirely different.
Correct.
Yeah.
Somebody has provided the answer on the financial control here. I think that's what we are done with. Yeah, Raveena, go ahead.
Okay, sir. Thank you for answering all the queries. I move forward to our second disclosure, which is general information. So in the general information, we need to give overview of the industry and important changes in the industry during the year, external environment and economic outlook, induction of strategic and financial partners during the year. In case of a company which has delisted its equity share during the year or till the date of the report, the particulars of delisting activity giving details. The third point we need to discuss is about the capital and debt structure, issue of shares or other convertible securities, equity shares with differential rights, sweat equity shares, issue of sweat equity shares, issue of debentures, issue of bonds or any non-convertible securities, and issue of warrants should be stated in this under this head. Detail of employee stock options, if there is any, shares held in trust for the benefit of employees where the voting rights are not exercised directly by the employees. So next comes the credit rating of securities. We need to mention the credit rating of securities given by the credit rating agencies. Fifth, investor education and protection fund. Over here, we need to give the details of the transfer or the transfers to the IEPF account made during the year, and year-wise amount of unpaid unclaimed dividend lying in the unpaid account into the year, and the corresponding shares which are liable to be transferred to the IEPF and the due dates for such transfer. Next comes
1 minute, Raveena, 1 minute. Just go with the previous slide, please. See, if you see that as per the Act, it is only the change in capital structure is to be given in the board's report, and Act is silent as far as the debt structure is concerned.
right.
Only it is SS-4 which is recommending that debt structure is also to be given. That means during the course of the year, if you are given any kind of debt securities, that is also to be brought in the board's report. At the same point of time, as far as the credit rating of securities is concerned, it also Act has not very clearly come, but most of the times it happens that whatever the credit rating has been given to the company, if it is going up or there is a change in the credit rating, it is also to be given in the board's report. But sometimes it may so happen you are going for the credit rating and you are not accepting that. That time you are not giving it in the board's report, but SS-4 is recommending that in case you are going for a credit rating, you are not accepting that, that is also to be given in the board's report. Why it is going slightly over and above the Act is because one of the objectives of the secretarial standards is to enhance the corporate governance norms and measures. So this is as a good governance norm. If you have gone for a credit rating, but you are not accepted that, what is the reason for that? That means you are not happy with the agency, the way they have analyzed your credit rating, or something else that you need to explain it in the board's report. Tomorrow, if somebody is questioning and you are answering, instead of that, why can't you do it voluntarily? That is the objective of giving it to the SS-4. Thank you.
So, sir, here's one question regarding this thing. So, can the shares held in trust for employees where the voting rights are not exercised directly by the employees given in this slide be explained by way of an example? So, the third point in the capital and debt structure, they want to know about with an example, what is it about? What kind of shares we have to write over here?
Bala, can I attempt?
The question is, that means what you are asking is shares are actually held by the trust and it is not held by the employees. And what is the voting right? Is that the question?
So the third point, it wants to get explained by an example.
Yeah, so under the ESOP program, the basically the stock options program, there are two ways how the employee stock options can be given. One is it can be given directly by the company by way of an allotment of shares directly to the employees. The second is a trust can actually administer it. The trust can transfer the shares. A company can provide the shares to the trust, and the trust can administer the shares and give it to the employees whenever the vesting happens. Now, the shares which are held by the trust will not be obviously held by the employees, and there is no voting rights by the employees. That's point number one. And point number two, under the SBEB regulations, which is the share-based employee benefit regulations of SEBI, also the trust who has the shares, who is administering these shares for the purpose of settlement, should also be not participating in the voting whenever there is a shareholders resolution is proposed. So I think in that context, this point has come up.
Okay.
Then
So
there is a question has come, credit rating for securities or credit rating for the long-term and short-term borrowing from banks also comes into this. Of course, credit rating is actually done for even the borrowing documents also, even whenever the company take the fixed deposit, even for the short term of 1 year or long term of 3 years, the rating is done, the rating is required to be disclosed here. Then the financial and board report needs to be approved by the same board meeting. I think she has got a slide. She is going to discuss this. Please wait.
yes,
I think that's all. I think so. Yeah, we can move forward.
so next comes the head management. In the head management, we need to say about the director and key managerial personnel, but the independent directors, declaration by directors, and statement of the statements and statement on compliance of code of conduct, board meetings, committees, recommendation and of audit committee, company's policy on directors, appointment and remuneration, board evaluation, remuneration of directors and employees of listed companies, remuneration received by managing or whole-time director from holding or subsidiary company, director's responsibility statement, internal financial controls, fraud reported by the auditor. Now, over here in the management thing, previously we did not have to give the remuneration of the all the directors used to come generally in the MGT 9. But now in the board report also, like after the amendments, we have to give the remuneration of the directors and employees of listed companies, as well as remuneration received by managing whole-time director from holding or subsidiary companies. Next comes the disclosure relating to subsidiary associated.
Just one point to add on this. See, there are a lot of overlap between what is required under SEBI LODR and the board's report. So there are many companies who actually repeat the same set of information both in the board's report and the corporate governance report. So that's one way of doing it. Second is you can cross-refer it. Let's say if you are mentioning in a corporate governance report, if you are preparing a board's report, you can give a reference to say that this has been explained in the specific section of the corporate governance report.
I think that is the better way of doing it. Actually, I would say rather adding, voluminous things, repetitive things. I think most of the company, they do that actually.
Yeah, just a downside with that is today corporate governance report need not be signed by the board members. By doing this, you are actually you are roping in the corporate governance report also to be signed by the board members. That's the only challenge.
So moving forward.
Not only that, earlier it was not permitted. In the board's report, whatever the information you have to furnish here only. Cross-referencing was not permitted earlier. Of late, now it is legally permitted also.
Correct. That's why there was a practice of everything to be produced in the board's report and cross-referring in the corporate governance report earlier.
Yeah, correct.
Yeah,
and one has to be very careful also. Sometimes people, I have seen referring to the management discussion and analysis report. Please remember that normally companies tend to write lot many things in the MD&A report, because though they are qualifying that the forward-looking statements and all are not something like that, they used to put a disclaimer. But MD&A is not a legal document. Corporate governance report is a legal document. Board's report is a legal document. But there are certain documents which are there in the annual report. They are not legal documents. Whenever you are making a cross reference to the document which is not legal, please ensure that whatever the information furnished there is legally you are owning it. Then only you refer it. Otherwise, better to write that in the board's report very clearly. Otherwise, you may be in trouble.
Exactly. The management MD&A is a view of the management. It is not the view of the board. That's the fine distinction.
So next we'll move to.
Yeah, I think in fact that is the best thing what you brought into Manikantha. Okay, that management discussion is the view of the management and board's report is the view of the board. Very fine
Correct.
distinction you have brought in. I really appreciate that.
Next, we'll move to the disclosures relating to subsidiaries, associates, and joint ventures. So, report on performance and financial position of the subsidiaries, associate, and joint ventures has to be mentioned over here. Companies which have become or ceased to be subsidiary, associates, and joint venture has also to be mentioned in this board report. Next comes the details of deposits, particulars of loan guarantees and investments, particulars of contracts or arrangements with related parties. Then comes a wide point, which is corporate social responsibility, conservation of energy, technology absorption, foreign exchange earning and outgo. So here the board has to describe the conservation of energy, technology absorption, foreign exchange earnings and outgo. Next comes the
Just on the point on CSR, there is enough and more regulations which has come in. It's a chapter by itself. I think I would strongly urge members to look at these specific set of regulations, because there are many things which has to be reported under this section. So I think there is an annual action plan which has to be made available on the website of the company, the progress report, the plan, the budget. There are a lot of things which has to be prescribed, which has evolved after this guidance, after the Secretarial Standard 4 has been finalized. So I think this is one area where a little more focus has to be there.
Not only that, it is also a responsibility has been casted very much on the CFO and CEO together on the CSR report on the financial aspect of it. Nowadays, I have seen very recently also, there have been cases on the CSR report where the CFO, CEO, even the company secretary, they have been actually penalized for various non-compliances. As you rightly say, this itself is a separate topic which calls for the discussion.
Yeah.
And again, coming to the conservation of the energy technology observation, many of the people who are actually working in the office-based IT companies and other places, they think it is not applicable to them because they are not manufacturing companies. I think that is a wrong notion, because the conservation of energy means a lot of things can be done even in the office also, wherever the switching of the light, not using the thing whenever AC is not required, and all those things can be done. Not only that, alternative source of the energy like a solar system, etc., that also can be done. So naturally, this need to be addressed even by those companies as well. But technology observation, if it is not there, you have to say there is nothing. And similarly, the foreign exchange, any earnings, anything, because it is not foreign exchange, earning is not there, outgo is not there. Even people visit abroad, they do spend in the foreign exchanges, etc., which needs to be actually given. People need to be careful in address this issue, other than the manufacturing units also, because there have been various cases by ROCs on such issues in the recent past as well. Yeah, Raveena, go ahead.
So we have two questions.
Yeah.
This one is all the RPTs which is in OCOB and arm's length and which is material required to be reported in AOC2 every year till the transaction exists, or is AOC2 a one-time reporting?
In my view, it has to be reported every year.
Every year reporting is there. That is very categorical. I also agree.
If there is a transaction which is happening,
yeah,
I think it comes in two ways. One is you would have approached to the shareholders to get it approved. Obviously, at that instance, you will be reporting under AOC2. And then if there are transactions which are happening under that agreement, every year we have to report it.
So basically, we'll move forward. Like if, as we have discussed about the related parties transaction particulars, CSR has to be given. Then if there is any foreign exchange earnings and outgo, then separate annexure has to be given regarding this.
No,
Then,
it is their choice. They can actually choose to write in the board report itself, or they can put a separate annexure. So
okay.
there is no specific requirement. It has to be a separate annexure, etc. It can be done anyway, whatever suits to the company. What is required is the disclosure. Yeah.
So one more question has to be is asked personally, that whether we have to follow this numbers numerically, like in the board report. While making the board report, the points has to be written as it is mentioned in the secretarial standard, or we can do the like up and down. We can move the point upside or downside, like.
There is no legal bar. You can-
There is no legal bar. It is up to your choice. Because what you think is the orders of the importance, you can choose, you can write, there is no problem at all. Because there are many cases, if it is not applicable for some reason also, you can take it at the end also. There is nothing, no bar is there. There is nothing called, it has to be followed only in this sequence.
And some points can be also added, like where the listing in the stock exchange, where the company is listed in which stock exchanges. Some points can also be added in the board.
Yeah, additional disclosures are always actually welcome, because the company can actually inform additional. Because what happens is, see, nowadays what happened, it is only a national terminal trading exchanges only, that is BSE and the NSE. I think Sudhakar will recollect it. In the earlier days, we used to have the various regional stock exchanges where the company is having a registered office. We need to get it registered ourselves there. And after that, you can get registered in the other stock exchanges also. The company where I was working, we had actually the register office at Pune. We have to register the Pune Stock Exchange. And of course, we listed in NSE and BSE. And that time, we also had the other stock exchanges which was operating, because we had an operation in Kolkata and Jamshedpur. We got listed in Kolkata Stock Exchange.
Yes.
We got listed in Madras Stock Exchange. We did give the company shares are listed in this stock exchanges, etc. Additional information for the disclosure of the people that we can always give. See, law requires these are all mandatory. Nothing is actually prohibiting if you are giving additional disclosure what you want to inform to the shareholders.
One more question has come, that is it mandatory to have a risk management policy for a private company for disclosure under risk management, or can a specific statement in this regard would be sufficient disclosure without having a policy?
Yeah, that should be fine.
That should be fine as far as the private company is actually concerned. But in reality, every company is concerned about the risk, whether it is a private or public or listed or listed. When you are doing a business, you are always concerned about the risk. And naturally, they will have the framework when the risk arises, what is happening, how they are going to tackle, all the things will be there. So it is a question which is put actually a theoretical. Otherwise, definitely every company works with the risk. Because I have an experience of having worked in the different private sector companies, unlisted public companies, even the listed companies. Every company had its own risk strategy. But as far as this question is concerned, yes, it is fine. Yeah.
The importance of this risk management is to give an information to the investor to see what is the risk the company is envisaging, or in the view of the board, what are the risks which they are foreseeing is something which has to be brought out. Because an investor can actually take a complete 360-degree viewpoint and try to make investment decision accordingly.
Okay, so I guess he has got his answer. Now we move forward to like after writing about the risk management, next comes the details of establishment of vigil mechanism, that is whistleblower policy, materials order of judicial bodies or regulations, auditors, about information about the auditor, like who has been appointed as audit secretarial or statutory auditor. Next comes the secretarial audit report, explanation in response to auditor's qualification, compliance with secretarial standards. So this report shall include a statement on compliance of applicable secretarial standards and other secretarial standards voluntarily adopted by the company.
There's one more question has actually come out. If there is any consequences if something needs to be disclosed but company unintentionally with the required disclosure. Answer is very simple. Anyway, whether it is unintentional, intentional, non-disclosure is the non-compliance. Naturally, regulator will actually take you for the task. That is what it is happening actually all around. In the beginning also, we said it. But the only thing is, yes, there are two questions there when you actually approach to the ROC level. By and large, the ROC will actually tend to go by typically the letters of the Act. He will try to levy the maximum penalty, which is there actually. But the recourse is available to you. You can go to the appeal in the regional director. You can explain the thing, what the circumstances, etc. Merit of the cases, he has got authority to revise the penalty levied by the ROC. In a couple of cases, that has been actually happening. But here there is nothing. It is unintentional, intentional, non-compliance or non-compliance. It will be actually required for the penal action by the ROCs. That is very simple. Auditors also include internal auditors. Yes, auditors, when we are talking about it, statutory auditor, internal auditor, cost auditor, secretarial auditor, all the type of audits are actually included. But the only thing is internal auditor gives the internal control report to the management of the company, which is taken by the statutory auditors. When it is actually coming to the addressing of the adverse remark, etc., it is only statutory auditors and the secretarial auditors which we are specifically talking about it. Because when the internal control audit report is given to the management, they are supposed to take the necessary action, etc., which in turn is actually gone by the statutory auditors. Because that is not addressed to the shareholders.
I think in my view,
in the companies, Mani, please go ahead.
Yeah. No, go ahead, sir. Go ahead.
No, you please finish it. Then
no, so in my view, the importance of auditors, the heading of an auditors is pertaining to the statutory auditors. And the reason why they wanted this to be mentioned is the reader or the investor should know who are those auditors who have been appointed at what fees and at what and how much tenure these have been he has been appointed. And the second thing is this actually becomes a queue. Let's say if there is a shareholder proposal for appointing an auditor, you have given an explanation already in your board's report saying that these are the set of people who have been actually selected for the purposes of shareholders approval, right? So that's a bare minimum at least. And of course, you can expand that. I have seen many companies who provide information about the secretarial auditor and cost auditors. But on internal auditors, I have a different viewpoint. I don't think internal auditors...
No, internal auditor don't find the place at all because internal audit is only for the management. They want to get the things done. So internal auditor is definitely not there. As you rightly say here, yes, it is a statutory auditor, but people do mention about the cost auditor and the secretarial auditor as well here. Yeah. But of course, they are all mentioned the separate headings.
Sorry, Sudhakar.
Yeah, I want to just add to that what you said, Mani, is that no doubt about under the Companies Act, wherever auditor said, it is always statutory auditors only, whether it is appointment, qualifications, disqualifications, and responsibilities, etc., things are there. Wherever, unless until it is secretarial auditor or cost auditor are clearly mentioned, you cannot draw simply that, whatever the qualification, disqualification of the auditors or his appointment, the tenure, etc., are not applicable to other two auditors at all.
Sir,
another point on this vigil mechanism, which is a whistleblower mechanism, it's a very evolving thing, and I think there's a lot of importance which is given by many companies, especially the auditors. Audit committees are very curious to know and open this channel of regular feedback flowing into them. This is one area where it can let the audit committee know that if there are any internal control failures or if there is any frauds, if there are any things which has happened. I think this is one area where audit committee will definitely look forward for it. The requirement to mention in the board's report is to say that, okay, there is a whistleblower mechanism which is available in the company and that has been suitably functioning well. And there are appropriate actions which are taken if there are any issues which are found by way of those complaints.
Bala sir, I just want to ask one thing, that although this board report is recommendatory, Secretary stand for, still there will be penal actions for non-disclosure.
No,
That
see,
is unintentional.
no, see, it is like this. It is not that a board report is actually specified only by the secretarial audit. Board report is actually specified under the Companies Act as well as the LODR regulations also. Because if you actually look into the Companies Act supervision, it talks about it after the balance sheet and profit and loss account duly approved. The board of directors they also listed down all these headings, they have listed down.
Right.
Secretarial standard itself is not the act or it is a provision, it is actually supplementing the Companies Act, actually what is there. So what is the penal actions is arising out of it is coming out of the Companies Act only. But only thing is the secretarial standard is actually supplementing the act itself. It is not, it is coming standalone from the secretarial audit itself. That is the point here. But
No,
only
I
thing
think,
is,
Raveena, you yourself had covered in one of the slides in the beginning. The secretarial standard is actually a set of principles.
Right.
It gives you a guidance of how each section or how each point has to be addressed or articulated. So therefore, secretarial standard itself is not a law. The law is actually coming out from the Companies Act. That's the Motherhood Act, if I can call.
see, only thing what happens is, when we read the law in the BAR Act, many things are not very clear. Explanations is not available. So the secretarial standard, along with the guidance notes, actually gives a better education to the people to understand the things better, what is actually stated in the provision of the Companies Act. That is the point here.
Absolutely agree.
I think there is a question on buyback. With respect to buyback of securities during the financial year, what precaution one should take and disclosure to be given in the board's report? So again, if this buyback, whether it's a listed, unlisted companies, that had to be seen first of all. For a listed entity, there is a SEBI buyback regulations, which is very exhaustive of how it has to be dealt with. Then coming to the disclosure point of view, I think it has to mention what was the percentage which was approved by the board, whether was it in line with the board remit or whether it was the authority was going to the shareholders or not. And the maximum number of shares which will be bought out, whether and what will be the price, maximum price which will be bought out, and whether it will be tender route, whether it will be open market. I think all those details have to be mentioned. Plus, in the last, if the buyback has been completed, then you have to mention whether all the shares which have been bought back, whether it is extinguished or not, whether all the compliances pertaining to the buyback regulations are completed or not, and the number of securities which have been bought by the company, whether it has been completed or not. And there are some affirmations which has to be made under the buyback regulations, saying that, okay, the company has not bought or has not issued the shares during the period of buyback, or the company will not be raising the capital in the next 1 year, so on and so forth. So there are a set of requirements which is mentioned in the buyback regulations. So those have to be disclosed.
I think there is some gentleman
Is disclosure with respect to buyback mandatory or recommendatory in the board's report? It is mandatory. It is mandatory. I think as a principle, all corporate actions, whatever has happened during the year, will all be mandatory.
I think some gentleman is actually sharing his thoughts on risk management. Risk management actually covers identifying the risks, impact on the business, mitigating of the plan for addressing the risk, business recovery plan, crisis management, sustainability report. In case of the CAC company regulated, RBI, various commitments, ALM, RMC, remuneration committee, provisions on certain of the results, etc. Now these days companies are giving information about the GRI program. In a disclosure with that, I think you already answered, buyback mandatory or otherwise. Yeah. Yes, Raveena.
Sir, Manikantha sir, what you mentioned about buyback, even it can get covered in the share capital structure of the company when we report in the director's report. as Raveena mentioned, shares and security, that can also, because it's a pre-buyback, would be different than the post-buyback. So capital would
Exactly. Where you
change only as well.
categorize,
So that
where
also
you,
can be taken care of.
true,
See,
very
it is,
true.
it
Where
is
you
your,
categorize is the secondary. I think the more important point is whether you should cover or not all the corporate actions. That
It
I
should-
think if you keep it as a principle, see,
It should be.
ultimately, what is this report? This report is actually giving a progress report of what has happened during the company, during the year. And therefore, the buyback, which is actually a one of the important thing which is touching the shareholders' interest, is something which has to mandatorily come in. Yeah, you are right. It can go under the capital structure. Capital and debt structure is the heading where these details can come in.
Even in director's report, if some matter is not mandatorily required to be disclosed, one can disclose it because it's information to the stakeholder at large, be it institution or the individual investor also.
Yeah, you have to be careful. That's a legal document. I think we are mentioning about the importance of it. You have to be very careful of what you're writing. You should not say more. You should not say less.
Correct, sir.
there is one question has come. Sir, I have some directors under the category of the independent director or acting as director, but their names are not there in the data bank, and the board report does not have any mention of this. Even the statutory auditor does not mention this. Can the secretarial audit give this as a secretarial audit report?
Yeah, I think you need to take a call on that. In my view, you should mention it in your audit report.
See, as a secretarial auditor, you are not concerned whether the statutory auditor has done anything or not. If you have to qualify your report, you have to qualify your report by all means. And especially in this case, that independent director is disqualified. But his name is not there in the data bank of IICA. That means what? He is not a registered independent director. So he is disqualified to act as that. It is a non-compliance. So as secretarial auditor, you must report it and you must qualify your report to that extent.
Today it is important to have all the independent directors associated with IICA directors data bank.
Yeah, many times it happens that what secretarial auditor finds may not be noticed by statutory auditor. So in that scenario, it happens that way. So that should be brought, and we have to bring it what is the fact in our audit report after discussion.
You see, Dipti, secretarial auditor is an independent auditor himself.
Yeah, that's right.
While he can draw references from the other audit, etc., but it does not mean that other auditors are not covered. He should not. If wherever he finds an non-compliances, he is bound to report it. It has to be reported.
Yeah.
Yeah, I think these people will come with a different lenses and different scope. Their mandates are very different. Secretarial auditor looks into specific requirements. Likewise, the statutory auditor looks into something very different.
Yeah, that is right.
But having said so, the access to the reports may be available to each other.
Yeah.
Because they can take as an input for when they are finalizing. In fact, many of them will not sign the report unless they see the draft report of the other auditor. Because it's very important, because you don't know, it can't be a conflicting reports coming out together. So they would definitely rely on each other's report.
And it is always a fight between secretarial many places who will give the final report first. So convenient way, or statutory auditor will say, I will give one signed secretarial auditor. Secretarial auditor will say, unless sign accounts, I will not give. So best way is via media, initial report exchange between each other so that both are on the same page.
Draft report.
Draft initial by auditor.
Yeah.
Yeah, please, sorry.
I think there is one more question. If any header is not applicable or has no disclosure which can be given, shall we still include that, such as failure to implement corporate action? No, I think this presentation also covered, if there is no requirement, if something is not applicable, you need not mention that. However, if there is an explicitly called out in the act that you have to mention this, you have to definitely mention. Failure to implement corporate action is actually this obligation is actually coming in the specific corporate actions itself. Let's say in the buyback, if you don't complete the buyback for whatever reason, in the buyback regulation, there is a specific requirement for you to go and mention in the board's report, in the annual report. So that's why I think Sudhakar also mentioned in the beginning that board's report is not a one-stop gap. The requirements can come in from other regulations or other requirements as well.
With the disclosure part. Next comes the corporate insolvency resolution process initiated under the Insolvency and Bankruptcy Code 2016 IBC. 21st point is failure to implement any corporate action.
One question here to the experts is, as per section 17 of the code of IBC and also 19, that the board power gets suspended and IRP takes over. So the board report should be signed by the IRP or the RP. But I just saw somewhere that ICSI had indicated, not that irrespective of the above, but it says that it is also good that both the RP and the board signed the financial statement. So not sure as per the guidance which is really the plausible one on this. So this is just my doubt.
Can I comment? Being
Yes, please. Yes, please.
Being RP and CS both and practically doing the same thing. See, as regards board report, lot of confusion in IBC, that is accepted. Board's report actually should be signed by director. We have to check the period for which it pertains. If it pertains to the period where the CRP process was not there, it should be signed by director because it happened post facto. IBC, so maybe when you are signing the IBC process is started, but it pertains to earlier years. So it should be signed by the directors. Even the accounts, the same question arises. What happens many times, directors refuse to sign. Now here comes the question what to do. There is no clarity on this part, but the practicality is that what we insist that IP can insist that he will sign provided director signs. The entire owner should not be taken and director should sign, and there should be clarification as this is signed only as on today IBC process is there, however, not responsible for any content of the report and all that. And this way it can be sorted out. That is the answer. Thank you.
Thank you.
In case of the unlisted company, if the company does not have a website, the company shall how the company will disclose the annual return details.
If I'm not wrong, I need to go back and check, but if I'm not wrong, almost all the unlisted companies now require a website if they cross the thresholds, what is mentioned.
Yeah, that is what my understanding also. That is what my understanding also. Environmental report can also be included in the board report. Yeah, anything voluntarily you can include. There is no issue at all because you know what happened. There are a lot of chemical companies. They are actually covered by the Environmental Act. They are supposed to put, you know, the effluent treatment plant. It is functioning and is not harming. So even the in and around the surrounding drinking water places, villages, etc. and other thing and all. You can always mention that. In fact, there have been cases in some of the chemical companies. I remember long back, not today, something around 20 years back in one of the chemical companies, they were actually discharging the effluent treatment and the water was actually used by them in the gardening areas, etc., not fully treated water. You know, water actually travels down. It traveled down in such a way that nearby villages, they were using the drinking water from the well. The well water actually got contaminated. The action has been taken very severely and ultimately the company has been told very clearly, you know, to put the full-fledged in, you know, effluent treatment plant and fully treated water only can be discharged. That is only for the growing the treatment purposes or such also fully treated water. Otherwise, the water should not be just such incident has taken place actually. So naturally, in the interest of that, additional disclosure is always welcome. You can disclose it. Yeah. I think there are some more messages. If a private company has undergone a merger, does it need to be mentioned in the board report?
Yes.
Yeah, it is to be all the companies. Board report is mandatory for all the companies, either it is private or unlisted or listed. It is. Yeah, go ahead, Raveena.
I think on the annual report, the answer is yeah. Whether annual return, whether it has to be on the website or not. The words if any, if it is required to be, if a company is required to maintain a website, then it has to be there. If it is not, it is not.
Yeah, Raveena.
So there is one more question. If there is a dispute between debtor company and the company has initiated suit under IBC to recover dues, should it be mentioned under point number 20 or 15 both?
Good question. I don't have an answer. Dipti, you want to weigh in here?
Let me read it. What if there is a dispute between debtor company and the company has initiated suit under IBC to recover dues? Should it be mentioned under point 20 of 15th corporate insolvency process? No, keep 19, 20, 20.
I'll just read point number.
Material order. See, one, it is material order of judicial body regulators. There is a dispute, no order. So it will not come in 15. Order has not received. 15 says material orders. Come to 20. Corporate insolvency resolution process initiated under the IBC code. Now here, initiated by you or initiated against the company?
Initiated against the company.
Initiated.
Sorry?
Initiated against the company by
Against the company. Now, if there is a dispute, debtor company and the company has initiated suit under IBC. Okay, we have filed under the IBC to somebody to recover. No, we did not mention.
It is initiated against the company. Like, the debtor has initiated the
Against the debtor company.
Between debtor company, no, debtor means I am a company and debtor company means I have to recover. And the company has initiated. Am I correct that company has initiated?
No, company has not initiated. Against the company.
No,
against the company.
Yes. Against
the company.
Actually, can you unmute and say whether company has initiated or there is a suit against the company? Company has initiated. That did not is your normal transaction.
Whichever is the company, ultimately you have to say that whether it is having a material impact on your financials or not. If it is having a material impact on your financials, you have to disclose it, otherwise not required.
No, Sudhakar, here the situation, you have certain recovery. So your debtors and write-offs and all that you are talking, and your actions for recovery. So this can be referred there. So like other recovery matter, you initiated IBC action. It has lot of things still to take place.
So what I'm trying to say, Dipti, is like this. Whether you initiated action against that other under IBC or other party has taken initiated against you, and it is just in the process only. So that point of time, unless until it come to a conclusion, it will not come under either 15 or in 20. But the only thing is, the moment you initiated a case, if it is having a material impact on your financials, you have to disclose that you have initiated a case or a case has been initiated against you. That you have to definitely break it.
Yeah, right.
That's what I say.
Yeah.
And or it is impacting the going concern of the company under 15. So especially under IBC, when you get this, it is possible that you may go to the next level, but at the level of the appellate, it is still possible that at time it could impact the going concern of the company.
Yeah. Okay. Yeah, Raveena.
So the next one more question is there. The company which has been merged with holding company and is not existing at the year end, how can it give details of its merger to its shareholder? I think only the transferring company, which is the surviving company, will give the details of the merger. So basically the question is, the company which has been merged with holding company and is not existing at the year end, how can it give details of its merger to its shareholder?
I think Raveena has answered the question. Only the surviving company will give the detail. Obviously.
I know
You already answered the question.
this is
Surviving-
already answered by the questionnaire. The
Yeah.
person has asked the
Yeah.
question.
Surveying company will
He
give.
just wants a clarification that is he right or wrong. So
जो
yes,
जिंदा है वही बोल
even
सकता है,
he
ऐसा
just-
है.
Yeah.
the surviving company will give the details of the merger.
Yeah, if the company is non-existent, there is nothing. Only the surveying company will give. That's right.
Okay, next question is where ESOPs are granted to KMPs, which value should be mentioned under remuneration?
Both has to be given, which is
Where-
the grant, which is the grant value, or the value at which has been given, and the market value. Under the remuneration, for the remuneration purposes, it is always taken as a perquisite value. So if it is a perquisite value, then it goes back to the value of market value of the shares. There is a specific accounting requirement of also of how do we calculate this value of the ESOP grants based on the vesting schedule, etc. So based on that, a value will be ascertained for each particular year. So that year, that valuation can be used for ascertaining what is the ESOP. Sorry, was there another question?
So if a KMP gets ESOPs from its parent company incorporated abroad, then is this also to be reported in remuneration?
Yes.
Yeah, it is to be reported.
So,
Sir.
yeah, Amit ji has a question.
23 number other disclosure. What all things should normally be covered? Like, for example, the insurance of all the assets have been properly insured, all the assets, similar like that, or you have any specific things which should get covered in this other disclosure with your experience, sir?
So I think this is a residuary clause. I think this is the Raveena. I'm not sure if there is a description for other disclosures. Otherwise, in my view, this is a residuary clause in case if anything which the board thinks has to be disclosed, it has to, it can come here.
Raveena, you have the secretarial standard in front of you.
Yes, yes, sir.
They have given the example in other disclosures. You
Yes,
can
correct.
Yeah, I think the secretarial standard speaks about the other disclosures.
Yes, sir.
Okay, sir. Thank you so much.
Even the guidance notes also addresses this issue.
So we have, I would just like to share. Can you see my screen?
Yeah,
Yeah,
we can see.
So it is over here, it is written. In the other disclosures, it is mentioned over here, a statement wherever applicable that the consolidated financials is also being presented in addition to the standalone financial statement of the company. Key initiative with respect to stakeholder relationship, customer relationship, environmental, sustainability, health and safety. Reasons for delay, if any, holding the annual general meeting. A statement as to whether cost record is recorded to be maintained by the company pursuant to an order of the central government and according and such records and accounts are maintained.
Yeah, as Manikantha has put it, it is actually, other residual thing which the company feel they want to inform to the shareholders. They can actually look at some of the things have been actually put up by the secretarial standard as well.
So,
A private company has a website, but a director do not want to upload the annual return on the website as the remuneration mentioned in the annual return is disclosed to everyone. who happens to browse the website in the situation as a company secretary. What can I do?
It's a violation, sir.
Sudhakar, I really do not know, but annual return is necessarily have to disclose the remuneration, correct? All the KMPs. That is a requirement.
But for private company, there is some exemption. I'm not very familiar with it. I need to come back on this point. Sorry.
Sorry, even the private companies are required to disclose the remuneration of KMPs in annual return.
Yeah, that is there.
No. So there are 2 points. One is disclosing it to the regulator and disclosing it to the company, to the public are 2 different things. Disclosing to the regulator, which is MCA or ROCA, it's mandatory. There is no doubt on that.
Correct.
My doubt is only on whether it has to go on to the website or not is something which I have to check for the private companies.
Yes, it is mandatory that even where a private limited company has a website, the annual return needs to be put on the website. So it's mandatory requirement.
Then I think
If it is a mandatory requirement, then you have to go by that.
Yeah.
That's all, because director cannot actually have their whims and fancies and desires.
it's always a tussle that we don't
Yeah.
want to show the remuneration, but it's a practical issue.
But some of the companies, what they do, private companies, if they do not want to disclose the remuneration publicly, then probably what they can do is that they can redact the remuneration part and then put up the annual return on the website.
Yeah, you can do that. There is a risk. There's a risk which you will be running on it.
Yes, definitely.
Yeah, but I think if it is a proprietary information or some competitive information, you can redact, but you have to have justification, the reasons of why you are not putting that.
Yeah.
But it's not a complete foolproof mechanism.
Definitely.
You are running a risk actually.
Yes.
Where you say market value of the ESOP should be mentioned every year, please clarify. Like it, ESOP was granted in the financial year 21-22 and no ESOP granted in the year 22-23. When the market value for ESOP granted in 21-22 should be disclosed in the annual report or financial year 22-23 also.
No, whenever, in whichever year there is a grant, only on that particular year, the disclosure has to happen with respect to the remuneration.
Correct. It is the particular approach to the financial year. That is right. You're right, actually. Yeah.
Let's say if I have been granted 10 lakhs worth of ESOPs, vesting over a period of 4 years, the date of grant, which will be in this financial year, has to mention, saying that this is this 10 lakhs has to be mentioned there.
Annual return, there is a question has come when there is no website of a private company.
Yeah, because I think that where this provision requires the private companies to put up the annual return on the website, there it is mentioned that it is to be put up on the website of the company, if any. So if there is any, if the company has declared that it has a website, then it has to put up its annual return.
No, that's why I was saying, I don't know whether there is a mandate for private companies to have a website. See, there are two different things. There are two different.
I couldn't find any exemption for a private company. But as the participant rightly mentions that if a company is having a website, they have to put up the annual return on the website and give a link to the board's report.
No, I was thinking a little differently. If it is mandated by the law to have the website, then you don't have a choice. Voluntarily, if you are having a website, that is nothing to do with this, right? So if you have a website.
One minute. Even if you are having a website voluntarily, okay, even if you are having a website voluntarily, that means for only listed companies, having website is mandatory. For unlisted company, it is non-mandatory under the Companies Act, right? So, but if the company is having a website for any other reason, say for example, suppose if it is a sectoral regulated company, then that particular regulations require a company to have a website. In such case, under the Companies Act, you have to upload the annual return on the website of the company. Even some policies also you have to upload it on the company. Say, for example, in case of telecom sector, we have some companies which are closely held companies, and website maintaining is not mandatory under the Companies Act, but mandatory under the telecom regulations. So
Right.
whatever the information is to be uploaded, we do upload the information under the Companies Act on that particular website. Similarly, some companies might be having a website even for their marketing purpose. You cannot say, look, this particular website is strictly for the marketing purpose. The moment you have a website of the company means you have a website of the company and you have to upload the information.
Very
There is
right.
no
The
exemption for that.
most MNCs, like what we do is we give the global divisional or the headquarters website as the website. And because it is said website, if any, so we don't have a website, so we don't upload, but we give the link of the global website for product and services.
That is better way you are managing.
I think, Raveena, you have to complete your presentation. It is 1 o'clock. It is.
Yeah. In CSR too, please clarify whether
Complete presentation, then we can take the queries.
Okay.
That is better, I think.
Okay. So after this additional disclosure under listing regulations is statement of deviation or variation, management discussion and analysis report, as we have discussed earlier, certificate and compliance of conditions of corporate governance from either the statutory auditor or practicing company secretary, then suspension of trading. The last point is disclosure pertaining to the sexual harassment of women at the workplace, Prevention, Prohibition and Redressal Act 2013. Lately, this point has been given immense importance in the company. So the disclosure shall include the following: a statement that the company has complied with the provisions relating to the constitution of Internal Complaints Committee under the Sexual Harassment of Women at the Workplace Act 2013. The details of number of cases filed and disposed as required under the Act. So basically, if there are no cases also, then also the company has to give a detail that there has no cases has been filed, and so they in the Act.
Sudhakar, you'll be highly delighted. Although you said it is 1 o'clock, you know, still our participants are 162. That shows the importance of this particular topic even at these hours. Yeah, go ahead.
Now, I was just adding on the previous one, the POSH, the anti-sexual harassment.
Yeah.
That is also now required under the BRSR, which is mandated by SEBI. So the importance it has found an importance by both the regulators. So therefore, if you're not, and also I think it is not only under the Companies Act, there is a mention about in the POSH Act also to say that this information has to be given in the annual report. So there are 3 mandatory requirements. There are 3 stages, at least there is a code to say that this information has to be provided.
Yeah, go ahead, Raveena.
So the other requirements are the report has to be approved, approval of the report has to be taken, signing of the report. So signing of the report shall be signed by the chairman of the company, if authorized in that behalf by the board, or by 2 directors, one of whom shall be the managing director, or in case of OPC by 1 director. The annexure to the report shall be signed in the similar manner as the report, except the report on CSR activities of the company, which is required to be signed by the CEO, that is Chief Executive Officer, or the Managing Director, or any other director of the company, and by the chairman of the CSR committee of the company. So dissemination, right of members to have copies of the report, placing of the report on the website. The report has to be placed on the website, as we have discussed earlier, and the copies of the report should be given to the members along with the financial statement and the annual report. Filing and submission of the report along with the audited financial statement of the company shall be filed with the registrar of companies. Every listed company shall submit to the stock exchange on which its securities are listed its financial statement together with a copy of report within 21 working days of it being approved and adopted in the annual general meeting. So now we are going to discuss the annexures to the report. So the following matters wherever applicable will be annexed to the report. Particulars of prescribed contracts or arrangements with related parties in form AOC2, whether it's in arm's length or not in arm's length basis. Prescribed particulars of remuneration of directors and employees. Secretarial audit report for the relevant year in form MR3, duly signed by the practicing company secretary. Annual report on CSR activities, prescribed details of conservation of energy, research and development, technology absorption, foreign exchange earnings and outgo, auditor certificate on corporate governance in case of companies which have listed their specified securities. This can be audited by a practicing company secretary or secretary or a chartered accountant. Dividend distribution policy in case of companies which have listed their specified securities. Company's policy on directors' appointment and remuneration, including criteria for determining qualifications, positive attributes, independence of a director, and other matters. So the certificate on compliance of condition of corporate governance, as we read, so the companies which have listed their specified securities shall annex the report or certificate obtained from either the statutory auditor or a practicing company secretary regarding compliance of the conditions of corporate governance. As we spoke about the dissemination of copies of the report, it is the right of members to have copies of the report, and it has to be sent either physically or in electronic form to every member at least 21 clear days in advance of the annual general meeting, along with the notice of the annual general meeting. In case of Section 8 companies, the said document shall be sent to the members not less than 14 clear days before the date of annual general meeting. Placing of the report on the website. As a Secretarial Standard 4 states about the placing of board report on the website of the company. If there is the website, then the report has to be placed in the website. Listed companies required to place at the website of the complete copy of the annual report, including balance sheet, profit and loss account, board report, corporate governance report, etc., as per the LODR regulations. So filing and submission of the report has to be the report along with the audited financial statement of the company shall be filed with the registrar of companies in the form MGT 14. We all know about that. The resolution passed by the board approving such report shall also be filed with the registrar of companies. However, private companies are not required to file such resolution with the ROC. Every listed company shall submit to stock exchange on which its securities are listed its financial statement together with a copy of report within 21 working days of it being approved and adopted in the annual general meeting. So now I would like to just discuss few case laws. So case law 1, it says Registrar of Companies of Tamil Nadu of Coimbatore penalized Messrs. Adhiban Mutual Benefit Nidhi Limited and its director for non-filing of resolution approving financials and board report by an adjudication order passed on 6th February 2023. Order for penalty under Section 454 of the Companies Act 2013 for violation of Section 117, subsection 3, subsection G of the Companies Act 2013, NGT 14 form. So penalty details for delayed filing of NGT 14 by 1,219 days for year ended 31st March 2019 for approving the board report. Company was penalized for rupees 1,31,900, whereas managing director was penalized for rupees 50,000. The penalty details for delayed filing of NGT 14 by 243 days for year ended 31st March 2020 for approving the board report. Company was penalized for 34,300 as well as managing director for the same amount. So total penalty for such non-filing was rupees 2,50,500 in total. Case law 2 says adjudication order passed by the ROC of Ahmedabad. Adjudication order on 8th July 2022 in the matter of Messrs. Bob Compressors India Private Limited, situated at Vadodara, the adjudication order bearing number ROC Gujarat / adjudication order Bob Compressors section 134L 3323 to 3326 for penalty under section 454 of the Companies Act 2013. Red with Companies Rule 2014 for violation of section 134 of the Companies Act 2013, read with Rule 8 subsection 3 of Companies Account Rules 2014. Non-disclosure of energy conservation, technology absorption, and forex earnings and outgo and board report. So when the question was asked that if there is a non-disclosure unintentionally, still the in this case we can see that the company was penalized for rupees 3 lakh and 2 directors at 50,000 each. That comes to 1 lakh, total to 4 lakh. So in case law 3, it says ROC Chennai, order bearing number F number ROC Michelin Tech, adjudication order section 134 subsection 3 subsection F JTA SKY 2022 dated 10th October 2022 for violation of the provision of section 134 subsection 3 subsection F of the Companies Act 2013 in the matter of Messrs. Michelin India Technology Center Private Limited, Chennai, for failing to address auditor's observation in the board report. Company penalty was 3 lakh and 2 directors at 50,000 each. In this cases, we can see that the private limited companies are also getting penalized for such things, for just not giving the disclosure in the board report, or for failing to address the auditor's observation. Such small points also are getting penalized by the company, by the ROC to the company and to its directors. So we cannot neglect any of the point of the board report, and the board report has to be formed and organized in a very well manner. So as Mr. Bala and Sudarshan sir said that they have started preparing from the month of December for the board report. So it's a request, friends, that we should not ignore the board report, the importance of the board report, to dismiss the penalty amount. That's all from my side. Thank you. I would also like to just share a board report of a company, if you just want a glance, and along with that we can we can solve the questions also which were asked by the participants meanwhile.
Wonderful presentation, Raveena. My appreciation to you. You have
Thank you
nicely
so much, sir.
covered everything. Very good. Good job done.
Thank you so
Good.
much, sir.
Very good
Sir,
presentation, Raveena.
I have
Very
a question. If the experts allow me to just speak for a minute.
Yeah.
This annual return, when it is placed before the website, it is from April to March. AGM could be somewhere in July, August of a listed or an unlisted company if they have a website. Now there is a certificate to be attached with the annual return. Now annual return is placed on a website somewhere in April because March is already over, and the mention is given in the annual report, which will get adopted somewhere in July, August at the time of AGM. So the practicing company secretary who is certifying the audit annual return after a post AGM, I mean, then how it should be addressed in the annual return which is placed on the website? Will there be a provisional report or the certificate? Or if you can just enlighten me, please.
Yeah, so there can be a provisional certificate which is attached, and I think you should call out to say that okay, this is still have to be approved. The certificate, the final certificate, will be issued only after that. So to that extent, you can make a note or a clarification in the annual return itself, and then you can put across the draft report which is signed by the professional as well as an attachment to your annual return. That should be fine, I believe.
Okay, sir. Thank you so much.
I think we can go through some of the questions here. Does the disclosure of the top 10 employee salary is mandatory in the board report? As I have seen, even big companies that it will be given at the request or it is mentioned in the website, etc. What are the proper compliances?
Yes, it has to be reported.
It has to be reported. In fact, if we see, there is a separate rule 5 and rule 6, if I am not mistaken, under the Managerial Regulation Act, it has to be given, it has to be reported. There is no question of not giving it away. If the regulator takes it, you have a serious problem. If a company gets its share capital audit done by a chartered accountant firm, which is not for review, does it amount to non-compliances? Can it be mentioned in the secretarial audit report? If a company gets its share capital audit done by a chartered accountant for which not peer reviewed, does it amount to non-compliance? I think they are asking about the secretarial
First of
company
all-
which is not peer reviewed, correct?
First of all, why are you getting an audit from that firm whom you are not satisfied with?
Questioner can unmute and answer if you want or clarify anything. If I'm confusing in questions.
Yes, ma'am. Actually, share capital audit was done by a chartered accountant firm, which is not peer reviewed. So does it amount to non-compliance? Can I report it in my secretarial audit report? That is what I'm asking.
I'm not sure if the mandate is to employ a firm who is peer reviewed. So I think
First of all,
that's to go back.
actually, why that share capital audit is to be done? If it is only a voluntary for a comfort of the management, if it is so, any chartered accountant can do, any company secretary can do it. Where is the requirement that it is to be peer reviewed?
Okay, got your point, sir.
Okay, so it is a voluntary thing. And you don't need to report anything in your secretarial audit report. Simple.
Annual return, whether it is the last financial year or the current financial year is the question.
Current financial year.
Current financial. I believe placing report of the board report in the website of the private company is not mandatory. That is what we have been actually talking about it. If the company has got a website, it need to be. If the company does not know, any additional disclosures has to be made for top 1,500 companies ESG reporting.
Yeah, those things are actually mandated from the LODR perspective, SEBI's listing regulations perspective, and also SEBI regulations. For example, there may be a requirement of having a dividend distribution policy for top 1,000 listed companies. And reporting the BRSR can be another one. There can be another one on risk management policy, and the risk management committee itself has to be constituted. So there are various things which are actually mandatory for top 1,500 listed company. For that, you need to look at from the listing regulations perspective.
Is it mandatory to upload the signed copy of the report on the website?
I mean, it is the practice of how the companies are doing it. As far as you are making an accurate statement, and if you are standing by it, I don't think there should be a problem.
It is not mandatory, let us be clear about that. Legally, it is not required. It is up to them. They want to do it.
So most of the companies put SD before the sign, but the
Yeah,
non-signing,
correct.
they put SD.
What is the basis of the penal amount in case law 1? It seems to be related with the period, or is it correct? Yeah, it is related to the period because you normally the penal actions is fixed amount is there plus per day amount is actually calculated, and there is a maximum limit is there. Based on that, they calculate the amount.
It depends, Aloy. It depends upon how the
sometimes-
penal. 1 minute. It depends upon how the penal provisions are envisaged. If it is a continuing offense, yes. Otherwise, not.
Yeah, if the continuous is number of days per day, often per day penalty multiplied by number of days. I think this case it was actually a continuing offense.
I was just saying sometimes the science and math will not work when it goes to the regulator.
That is right. That is right. What are the complaints to be made by the power sector company?
Refer to power sector laws.
Yeah, that is right. That's all I think we have done with all the
Only one thing, Bala, I would like to mention is that several
Yeah.
times what happens is companies hold their annual general meeting at a shorter notice. And people comply with that, no doubt about the consent of 95% or 100%, whatever it is, they do take before holding the AGM at a shorter notice. Most of the times, company secretaries make a fox pass in obtaining the consent for circulating the financial statements also at a shorter notice. So taking the consent for AGM, holding at AGM at a shorter notice will not automatically permit you to circulate the financial statements at a shorter notice. You have to take a combined consent for both the things, or maybe separate consents for the things. Otherwise, you will be in trouble. Please take care of this.
Good point, Sudhakar.
Yeah.
Very valid point.
The
I
next
think,
question.
yeah,
So there are questions.
yes.
So private companies declaring dividend every year, should they mention dividend distribution policy mandatorily?
No, so once you have a policy, it need not be mentioned every year. You can give a reference on your website. The link of that, if you are incorporating the policy, that should be in the board's report, that should be fine.
Yeah, if you have hosted the policy on the website, you can just give a link, that's all.
However, if there is any change which has happened, or if there are no changes, a statement to that extent you should mention, saying that, okay, there are no changes in the last year. Or if there are changes, these were some highlights of the changes also you can mention.
I think, Dipti, we can close this.
Yeah, now this is closed.
Yeah.
Thanks, Ravi, just stop sharing the screen. Thanks, Sarna, for your good, wonderful presentation. And
Very nicely done, Raveena. Very nicely done. Thank you.
Thank you so much, sir.
Thank you, everyone. Thank you, Mehta and Mehta, for conducting this wonderful session.
Thanks a lot.
Thank you
And
so much.
we appreciate all participants because your continuous participation and actual involvement and deliberation makes this session live. The intention of this always webinar is to exchange the knowledge with each other. And thanks for all participants. Thank you, Manikantha, for your special time and with your, not proper health also.
Thank you.
Thanks a lot. Thanks, Mr. Bala. Thanks, Sudhakar. Thanks, Raveena. Thanks, everyone. Thanks a lot. Happy Holi to everyone. And next week we'll come with related party transactions. Thanks a lot.
Thanks a lot to everybody. It was really a value-adding session. Especially it was nice to interact with so many people and so many questions and so many interactions, etc. It is really, a continuous learning for me as well at this age. Thanks a lot to everybody.
Thank you.
Thank you so much.
I was amazed with the way this the entire session went with so much of interaction. It's hardly to see. I mean, other seminars which I have attended, it's only a one-way direction. But here, there is a lot of interactions. Very nice. I think all the participants kept us on the toes. So we don't know what is coming next. So
sir, I would like to add here, when the panelists are expert, we would like to throw, more and more questions for our clarity's sake.
Absolutely.
Even during CA days and company secretary days on Saturday, whether we would have read or not. But when there is this session, one day before, we will go through at least the documents again in order to get a closer this thing to this. So it's really wonderful. Age is no bar lagatar. So that's what is great.
I would like to place my sincere appreciation to Mehta and Mehta Associates for their wonderful thinking of these sessions. These are not easy to get the panelists, to get the participants, to have this kind of a platform. It's not easy. So I must compliment you and congratulate you for all the good work. And my sincere thanks to Professor Bala and Sudhakar. Very well done. All the good insights of their experience. This has been just crystallized, and all their 30-40 years of experience have been distilled and provided you in a knowledge snippets. So please make best use of this. Thank you, everyone.
Timely conduct this topic on the director's report, which is live now in next 2 months' time, April, May, for listed company especially.
And we are doing this session for more than 1 year continuously every Saturday.
Yes.
So thanks a lot, everyone. Thank you.
I'm
Bye.
privileged to be a part
Thanks
of
a lot.
this.
Good day.
Thank
Happy
you.
Holi.
Have a happy weekend and a happy holiday to all of you. Thank you.